Julia Spencer is a real estate investor with over 25 years' experience who owns multiple investment properties. She's a single mother of two who moved to the U.S. in 1993 with only $20 in her pocket. She currently holds an MBA. Julia Spencer is neither a realtor nor an attorney, and the contents of this recording are only her opinions. Get her free guide to investing at juliamspencer.com. I'm your host, Dr. Steve G. Jones, multimillionaire and hypnotherapist. My website is stevegjones.com. U.S. Real Estate Investing for Foreigners, Module 7, General Questions and Answers about Tax Foreclosures.
Hello, this is Julia M. Spencer, real estate advisor, investor, and enthusiast. And in this bonus last module for this program for foreign investors wanting to invest in real estate in the United States, I wanted to talk a little bit of some of the general questions that I've had from people, from investors from the United States, but they're also applicable to foreign investors. And specifically, I had a lady contact me through the internet. She has taken my advice on contacting me through my website, through my email. Of course, my email is realestate@juliamspencer.com. And she basically subscribed to my newsletter and also asked me some very specific questions that I want to answer here. And I'm going to go ahead and just read the questions, and I'm going to talk about it a little bit. This lady, the first question basically is, aren't all liens against a property wiped out once it's sold at a tax sales auction? The answer is yes and no. And I'm going to be a little bit more specific on why I say that. The one thing that I always have to do when a question like this is asked is the fact I have to ask where this person is, ask what area this person is asking me about, specifically what state. It would be better to know what county, because of course this kind of question is more like a state question, but there might be some specific rules, and I have to be very careful about how to give advice in this area so I don't give the wrong advice. And again, as always, this is my knowledge, my opinions. I'm not an attorney. I'm not a realtor. I'm a private real estate investor with more than 20 years of knowledge. So that is what I base my answers on. So I encourage you to cross-check my information with what you find on the internet or with asking other experts, actual realtors, attorneys, other investors, or anybody else you can get your hands on. And with those kinds of questions, as with any kind of research, the more information you get, the better. And after a while, you will be able to weed out the erroneous information and kind of get the picture of what the actual answer is. But let me tell you what I think about this question. When you buy a tax lien foreclosure, the way that works is the tax is the tax that a county assesses on a property or a city of first in line versus all other liens. And I'm talking all other liens, including the following, which would be a mortgage lien. It would be a construction lien. For example, if a contractor had come to your property and fixed the roof, didn't get paid, the contractor can now put a lien against the property saying that if anybody that owns this property is going to sell it someday, this lien has to be first wiped out to satisfy my interest in this property because I put this roof in and I put my money, my effort, my labor, and my materials in there, and that part of that belongs to me. And until I get paid, I have a lien against this property, and it's going to be very difficult to title insure a property that has a lien against it. So tax liens go before mortgage liens, and they go before the liens from a contractor, for example. That being said, it depends on where this property that you're asking me about is located. If it's within the city limits, you have city taxes that are being assessed as well as county taxes. Now, I can't tell you that the city taxes or the county taxes are first because they're taxes. They're going to be on the equal level. So what I will always recommend before you purchase a property at a tax lien foreclosure sale, find out what other liens are on this property. You can do this by going to the courthouse and look at go to the recorder of deeds. The liens are usually with the court recorder. Look up that specific property. You may be able to find somebody that works at the courthouse that knows how to look up a specific property. Or in some more advanced or more computerized counties, that information might actually be online. So you basically go and check and see if you can find what other liens are against the property. Now, I have to tell you, and this is what I know from personal knowledge, you can't always, I would not recommend, if you're dealing with an actual homeowner, I would not recommend to ask them if there's any other liens on the property, because sometimes the homeowners don't even know that there's liens against their property. I've had friends, and I'm kind of interested in real estate, so at some point way back in the past, just to learn how the process worked, I looked up all my friends' properties online because the information is public. You can access it. I type in their address and I see what's going on. You know, how much did they pay for their house? How much, when did they close on the mortgage, which means how much more money do they owe? I'm kind of a little bit nosy like that, but not in the nosy sense that I'm going to go use that information against you. It's more an educational kind of thing for me. And also for me to learn how to read lien records or deed records or any kind of records that are against the property. And basically the story kind of develops with a property. But before I'm being sidetracked, basically a short question to you answer, aren't all liens against the property wiped out once it's sold at the tax sales auction? They are, as long as they're junior liens to the tax lien. And for my particular case, it is very important to know what are the guidelines of when a property is being sold. For example, in my particular county, the county tax authorities will auction a property right away after the tax has not been paid in a year. In terms of the city officials, they're not going to auction a property off right away. They're going to wait until a certain amount has accumulated. Of course, city taxes are usually less than county taxes. So they're going to wait and see until the person maybe pays. So what usually happens is a property where the taxes haven't been paid, it is usually the fact that the county taxes and the city taxes haven't been paid, but the county will go to auction first. So I would go to the county sales first. I would always monitor, of course, the city sales too to see if anything that is being auctioned off that I already bought at a county sale previously. But I basically would buy them at the first sale, the first person that brings a property to auction. And in my case, it's the county. So I would go to the county sale, I would buy the property there, and then I would go, or preferably actually before, I would find out what other liens are against the property. And usually there's outstanding city taxes, which I then have to pay as well. So they don't go to auction. Now, if I were not to do this, then the city has the right to auction off the city tax lien. And then you have basically two investors. One owns a county tax lien and one owns a city tax lien against the same property. And you basically both riding on your 20%. In my state, of course, the state of Georgia is 20% premium. And we're both basically riding at the same time. And if the sale doesn't happen at the same time, like if the county auctions theirs off first and the city auctions theirs off next, of course, the city tax lien investor is not able to foreclose on the right to redeem until after the county tax lien foreclosure owner, the new investor, does. So then you have two investors interested in the same property. It gets to be kind of convoluted. I tried to avoid that situation, and it's easy to avoid. You basically just find out and see if there's any city taxes. The other lien that I want to talk about that is not erased when you buy tax lien foreclosure is an IRS lien. Now, in some cases, in some states, the IRS is able to levy liens against properties when the owners of the property have not paid their income taxes or other taxes that they're due to pay. Usually, the county is supposed to disclose that information before tax sale, that a particular property is encumbered in that way. And you should definitely go to the courthouse and verify or check that information. But what I would recommend, if you're going after a property at a tax lien foreclosure sale or a tax deed foreclosure sale, go ahead and check again, check the records, check the property, put your eyes on the property, and go to the courthouse and find out what other liens are there. Of course, an IRS lien is not going to be erased. You may be responsible. Well, there's specific rules about the IRS lien. The IRS lien basically rides alongside with you. It's not a junior lien, so it's not going to get erased. And there's a specific rule or specific risk that if you buy a tax lien foreclosure at a county or city tax sale and there's an IRS lien against that property, then from the date of the sale, the IRS can buy out your position within 120 days and pay you only 6%. So you could possibly lose, if you're in a state where you normally would have gotten paid 20%, you would only get 14%. That's so far for IRS liens. There's another lien that is not erased when you buy tax lien foreclosures, and that would be any kind of lien that the city or the county has assessed against the property for mowing fees. For example, if a property has been so badly maintained that the city had to come out and cut the grass, and of course there's costs associated with that, they would, that is an assessment that is levied against the property that's not erased. So, however, that's a very small amount usually. And again, this is information that is publicly available to you prior to the sale. If you know how to do your homework, I can teach you how to do the homework. I'm going to create a specific product, a specific download, and informational ebook on how that pertains to your area and your state. Just ask me which one you want me to create and research for you. And you be able to easily avoid those kind of problem properties, as I call them. And just don't bid on those. It's a very small percentage that has an IRS lien. It's a very small percentage that has a county assessment lien on it, or something that's assessed for mowing fees or something like that. And there's also usually some sort of order whether the city or the county auctions their properties off first. So once you learn to avoid those little tiny pitfalls, just avoid bidding on the problem properties and you're good to go. So the good thing I can tell you about this and answering this question is the fact that the biggest lien usually against a real estate property is a mortgage lien. That's basically how much the property is worth when the original owners have bought it. And that is, in fact, a junior lien to any kind of tax lien, and it will be erased at the auction. You will not be responsible for the mortgage on a property if you buy a tax lien foreclosure. Now, the original owners may have to still somehow have to pay for this mortgage, because obviously the money is still owed and the mortgage company may come after them in some civil suit or some other way to get the money back. But you, as the investor buying a tax lien foreclosure or tax deed foreclosure, you will not be responsible for that biggest lien, which is usually the mortgage. So the answer is yes and no. But if you watched a little kind of few caveats on the way, you shouldn't have to worry about that. Now, the next question that was asked, and I'm going to read the question, was the following: You don't advise to purchase tax lien properties without seeing what you bought. How about paying an agent in the area to view and do research for you, or paying a title company to research properties? Now, the one thing I wanted to say about looking at properties before you buy them: if you're buying tax lien foreclosures or city tax foreclosures, you should do your own research. And especially if you're starting off and this is going to be your line of business and you haven't you haven't had your team established, you need to learn how to do this yourself before you can tell somebody else to do it for you. And the reason I'm saying that, and I can tell you I've learned from very bad experience, when you give somebody some floozy, non-specific directions, they're probably going to screw up. They're going to look at something and they're not going to give you the information that you need. You're going to act on this information and you're going to lose a lot of money. And I want you to avoid losing a lot of money. I want you to make some money. So it's okay paying somebody to look at the properties for you if you're not local or you can't get there yourself. But you need to already know how to do this yourself. You need to have done it yourself already. You need to understand the process. And you need to be able to give people specific directions on what to look for. And I would definitely advise that when you get into tax lien foreclosures and tax deed foreclosures, to start in your own area or close to where you want to invest in, and start driving around looking at the properties yourself. Now, it is true that you can't go inside the properties because sometimes there's inhabitants and they're either the original owners or tenants, and sometimes the properties are vacant. And I've seen lots and lots of times where the properties were just left unlocked, deserted, and abandoned. And in those cases, I have walked in and just checked them out. I always bring, of course, somebody with me in case, there's safety issues or, bad safety, maybe. And I'm not talking somebody being there. I'm talking more like things falling from the roof on top of me and me being there by myself. But basically, you want to know, if you're starting off, and I recommend this, don't push this task off to anybody else because this is important. You're going to need to go there yourself and you're going to have to learn what to look for. You're going to have to look at many, many, many houses to find what is it that you're looking for. I mean, you need to learn to see if a roof needs maintained. You need to learn to see if this is a bad area, if it has bars in front of the window, or you probably, are in an area that's burglary prone. You want to drive there. I mean, even if the person that you send there can give you an accurate assessment of the property, nothing is going to give you an accurate assessment of the neighborhood. And location, as with any real estate, is king. Location can make up for a lot. It can also ruin a lot of the value of a property. So what I would say is, even though you can't go inside the property, you should always try to put your eyes on it before you bid on it, whether it be looking on Google Maps on the street view or going online and just looking at the property cards if your county has pictures. And better yet is actually to just take a Saturday and start driving around, make yourself an itinerary and drive to these properties, take some pictures. If you have to, don't bother the inhabitants. There's many times where I stayed a good half a block or a few hundred yards away from a property because I just don't want to bother the people that are in there. But you need to, and also, paying an agent, you need to start working a system, establishing a system where you can first make some money before you can pay an agent. And the last part of this question, you'd asked me about paying a title company to research properties. A title company does pretty much what I just asked you to do in my first question. They will go to the courthouse. They will have somebody who's knowledgeable in that area, and they will ask the court recorder to pull up every record of a specific property in that county and where those records are located. And they're going to sit and they're just going to read and they're going to make some notes. And then they're going to send that information to somebody who's an underwriter at the title insurance company and basically tell them, hey, this property is good, or this property is encumbered, or there's somebody else that may have a claim to this property, or whatever the information that they find. This, in paying a title company, is necessary if you get a mortgage on a house, because obviously you have to get title insurance, which a title company that gives you insurance actually does the research, and that costs money. But if you buy in tax lien foreclosures, you're not getting a mortgage on these properties, at least not yet. You need to learn how to do the title company research yourself, and it is not hard to do. I can teach you how to do it. I can tell you what to look for. In fact, if you bring me a property and you kind of give me an overview of what you found, I can help you interpret that information because it's very, very easy to do. The next question I have from this person, this is my last question, is the person lives in California, and there are plenty of tax lien foreclosures there that this person has been monitoring in the sales. And she's trying to get into the this overage business, or I presume what she meant to say is in the buying tax lien foreclosures business, and then maybe wholesaling the properties, not really flipping or holding or anything like that, but basically buying them and selling them for a profit. And she said she really would like to buy the properties from the owner just before the tax sale. And how do I feel about that? Let me tell you what happens usually. Usually the owners that are being foreclosed on for taxes, and in most places it's the same way, because the mortgage company, if you have a mortgage on a property, the mortgage will be a junior lien to the tax lien. And so when a property goes for a tax foreclosure, usually there's no more mortgage because it's been paid off, or there's never been a mortgage because the house was paid in cash. And for some reason, one or another, the owner is not able to pay for the taxes that year, be city or county. I generally do not advise against the fact buying the properties from the original owner. And in fact, you can get a list of the properties that are being auctioned off from the county or from the city, wherever you're buying these properties from, and you can get the address. But you generally don't get contact information for the owner. You can get the address of the owner if it's a local owner or a homestead. The person will be actually living in the property. But a lot of times these are also investment properties and the owners don't live there, or the address on the property card is a P.O. box, so there's no way for you to contact them other than maybe send them a letter. You can look up the corporation name at the corporation registration website for that state and find out a good number for maybe an officer of that corporation. You can contact them that way. But in general, I would say it's probably pretty difficult to buy a property from the owners just before the tax sale, because most owners are, first off, they're a little bit embarrassed the fact that their properties are going for sale. Let's talk about the homesteads first. The people that are actually living in their own properties and being foreclosed on for taxes, they're going to be very apprehensive and very upset. First off, that they're being foreclosed on, but second off, if some investor comes along and tries to buy their property, they're going to be really upset. Now, what has happened to me before is when I bought these properties, I would get the original owners get immediately contacted if their property is sold or the lien is sold against their property. And they get the phone number because you have to provide the phone number to the tax commissioner's office once you buy it. So what has happened to me before when I bought properties, the original owners had called me immediately, like the next day, and they were super upset. They were very, very mad. They were very stressed. They were, really in dire straits and basically wanting to know, hey, why did you buy my property? Why do you want to kick me out of my house? Why are you doing this to me? Who are you? And basically, I try to be very nice to them. I try to be very non-pushy, I don't want to kick them out of their house. I basically tell them, like, look, you haven't paid your taxes. The city or the county or whoever is trying to collect. They have to pay for the schools, for the roads, for the city workers, for the county workers, and you got to pay your taxes. But you didn't pay your taxes, so the law basically says that since you didn't, your lien, well, in my state, it's a lien state, the lien against the property has been auctioned off, and I'm an investor. And I'm a single mom, I have kids to raise, and I really hope that you can pay me back, of course, with the 20% premium within a year. Now, in the state of Georgia, and I've researched this recently because I think I've given bad information about the state of Georgia, but actually it's 20% per year. So if they pay me back one day after 1 year, it's 40% in addition of what I paid plus all my expenses. And if I have to send them a notice, it's another 20%. So it's very, very imperative, and I tell them this too, to pay me back before that year is up. But what I'm trying to say with all of this is People are very apprehensive and very upset when they lose their property, especially for small amounts like taxes, comparatively probably what their property is worth. I would be very careful approaching owners to buy the property from them. You might get into a lot of trouble even stepping on their property. You might get kicked out. If you have strong stamina and you have or maybe you know the people, or you have a good personality, social personality to interact with them and discuss the options, then you can maybe come to some sort of agreement. And I never not advise people to come to an agreement before things go to a sale or any kind of legal authority, because I believe that any kind of problem or issue can be worked out prior to having to go to authorities to do it. So how do I feel about that? Yeah, I mean, if you can figure out how to do this, if you can send the owners a letter, you can contact them, you can get them in a conversation with you, by all means do that, because that's going to save you time and effort, especially if you're in an area where you're going to be having to wait a long time before you can redeem your property, so your money is kind of frozen for a while. This is true, for example, for my state, Georgia. But definitely try to do that if you like to try to do that. But I want to just caution the fact that you might get sent to closed doors, or the door might be getting slammed in your face. But as with anybody that wants to be successful, you have to be prepared to be doubted and ridiculed and made fun of. And that's kind of like the benchmark of being successful. So if you want to try to go that route, all the power to you. Tell me how it goes. I want to hear about it, and happy investing on that one.
For your free guide to real estate investing, visit juliamspencer.com.